Recently, the Bitcoin price dropped below $20,000 per Bitcoin, which is already over 60% off the all-time high of $64,800, which was reached on April the 14th, 2021. And some people are afraid it will go down even more. After Tesla billionaire Elon Musk revealed a surprise crypto bet, a Chinese Communist Party newspaper warned that the Bitcoin price might go down to zero. That's what we're going to talk about in this video. And remember, this video should not be considered as financial advice. Please check with your financial advisor before making any investments. Welcome to the Peak Performance channel, the place where you come to be inspired to create a more prosperous future. Hello there, in this video I want to talk about Bitcoin and why some people think it's headed to zero. Now I know that might sound like a crazy statement, but hear me out. I think there are a few key reasons why Bitcoin could be doomed, and in this video I'm going to share them with you. Bitcoin is a risky investment that's not likely to pay off in the long run, according to economist Peter Schiff. Schiff is known for predicting the 2008 financial crash, and he believes that Bitcoin will experience a similar fate. These currencies are going to trade to zero or pretty close to it when the bubble pops, predicts Schiff. Right now, the only reason why people are buying Bitcoin is because the price is going up. When it turns around, they're not going to sell it for the same reason. There is no value in Bitcoin. You can't use it as money, Schiff points out. It's too slow, too expensive, and too vulnerable. The investor called Bitcoin a speculative digital asset. He thinks that it will implode as soon as the price stops going up. According to Schiff, there's a problem with flat currencies. However, there are other digital currencies that have massive inflation. Even Bitcoin itself has spun off Bitcoin Cash and Bitcoin Gold. There's no limit to the number of worthless tokens that can be created with the Bitcoin brand, he said. Even Warren Buffett has made his share of extremely cutting remarks about Bitcoin and cryptocurrency over the years. I don't have any Bitcoin. I don't own any cryptocurrency. I never will, he told CNBC in 2020. It's probably rat poison squared, Buffett once said. The 91-year-old entrepreneur, whose net worth is estimated to be $124.3 billion, has reiterated that Bitcoin doesn't produce anything. Buffett says that he wouldn't pay even $25 to buy all the existing coins in circulation. I wouldn't take it because what would I do with it, he added. Bill Gates, the Microsoft founder, doubled down on his criticism of cryptocurrencies as the market endures one of its worst crashes to date. Gates has previously criticized cryptocurrency for its lack of any real value. I like investing in things that have valuable output. The value of companies is based on how they make great products. The value of crypto is just what some other person decides someone else will pay for it. So not adding to society like other investments, Gates said on a Reddit question and answer session. Goldman Sachs just released their latest recession prediction. They think there's a 30% chance of a recession happening. Their last prediction was at 15%. JP Morgan also thinks there's a 35% chance of a recession happening, while Citi have raised their odds to 50%. It all started with Binance, which is the biggest crypto company in the world. Last year, in 2021, there was $7.7 trillion worth of value exchanged on their platform. That amount of money represented about 30% of all crypto activity in the world. Binance is a huge cryptocurrency exchange. In the last 24 hours alone, they processed $9 billion in transactions. The closest competitor, FTX, only processed $1.3 billion in transactions during the same time period, almost 7 times less than Binance. Just this weekend, they announced that they're dropping the fees for trading Bitcoin to $0. This means that as long as you use their platform to trade Bitcoin and other currencies like US dollars, USDC or Tether, you'll not have to pay any fees. This is similar to Robinhood revolutionizing the entire stock market. In 2002, 62% of Americans were invested in the stock market. However, the stock market crashed, causing many people to sell their stocks. As a result, only 52% of Americans currently own stocks. The latest Gallup poll shows that about 58% of people own stocks. Even though the stock market has grown in the last 10 years, it's only up about 6%. This is still well below what it was 20 years ago. Now, sometimes statistics don't tell us the whole story. If we don't look closer at them, we might not understand what they mean. For example, in 2022, almost 9 out of 10 people who had a higher income of 6 figures or more were invested in the stock market. They either owned a taxable brokerage account or were invested through their 401k employer-sponsored plan. People who own stocks now can make money in different ways. The stock market is an unlimited resource, so we can create an infinite number of stocks. There are also unlimited ways to distribute money in the stock market. Unlike Bitcoin, which is a finite resource, the stock market has no limit. Bitcoin is a limited resource, so when Binance lowers their fees to $0, it doesn't mean that more people will start using Bitcoin right away. However, this does mean that the few people who do start using Bitcoin will have a bigger impact on its price. This fee competition has just started with Binance this week. Here's a quick reminder before we continue. Make sure you smash that like button and hit the subscribe and notification button if you haven't already done so. It means that YouTube sends you more of these kinds of videos and it helps our channel as well. Okay, let's get back to the video. On the other hand, Bitcoin has not become a currency. The biggest problem for Bitcoin and really most cryptocurrencies is volatility. Volatility at lower prices was seen as a good thing when Bitcoin was new and just starting to become popular. But at higher prices, volatility becomes a problem. Volatility is a bad thing for a currency. A currency needs to be stable so that people can trust it. People use a currency to pay for things in the future. They want to know that they'll be able to earn the same currency when they need it. But Bitcoin doesn't work this way. There are very few merchants who accept Bitcoin as payment, and almost no goods are priced in BTC. So what is Bitcoin if it's not a currency? It is not an asset class because it generates no cash flows. It doesn't even have a crypto app ecosystem developed around it like Ethereum, which would generate what are called gas fees. Compared to this, Bitcoin generates a small amount of money each day from transaction fees. Almost all of this money comes from people transferring money to or from exchanges or wallets. If Bitcoin stopped being traded, this fee would drop to zero, like when Bitcoin crashes. The only argument that remains is that BTC is like gold, but really, it isn't. Gold exists as it is once it's mined. All the gold that has ever been taken out of the ground since the beginning of time still exists in its original condition. It doesn't corrode, dissolve, evaporate or diffuse. Gold can be stored in a vault by users in a decentralized way. On the other hand, BTC needs a network of miners to keep the blockchain working in order for the tokens already mined to have value. If the price falls below a certain point, Bitcoin mining becomes unprofitable for a long period of time. Only time will tell what BTC is truly worth. If it does unravel, the second-order effects of $1 trillion going to zero could be huge. Thank you for being all ears throughout the entire video. If you'd like to learn more about the nature of this business, subscribe now and click on the notification bell to be updated with my latest uploads. To create is effort. To copy is genius, Albert Einstein. If you want to expand your income by engaging with some side hustles, feel free to contact me, so we'll get things moving right away. Remember, if you want to change your life, let's make a change together. You need to make a change.